Good afternoon, Space Force. We have the FOMC results. The Fed has decided to pause the rate hikes. We have the official statement and more coming up, along with some market news. First off, let's get to it. The Fed decided to pause rates again. That means that the rate is still going to stick around 5.5%. So let's go through the press release really quick. Today is November 1st, 2023. Recent indicators suggest that economic activity expanded at a strong pace in the third quarter. Job gains have moderated since earlier in the year but remain strong, and the unemployment rate has remained low. Inflation remains elevated. The U.S. banking system is sound and resilient. Tighter financial and credit conditions for households and businesses are likely to weigh on economic activity, hiring, and inflation. The extent of these effects remains uncertain. The committee remains highly attentive to inflation risks. The committee seeks to achieve maximum employment and inflation at the rate of 2% over the long run. In support of these goals, the committee decided to maintain the target range for the federal funds rate at 5.25% to 5.5%. The committee will continue to assess additional information and its implications for monetary policy in determining the extent of additional policy firming that may be appropriate to return inflation to 2% over time. The committee will take into account the cumulative tightening of the monetary policy, the lags with which the monetary policy affects economic activity and inflation, and economic and financial developments. In addition, the committee will continue reducing its holdings of Treasury securities and agency debt and agency mortgage-backed securities, as described in its previously announced plans. The committee is strongly committed to returning inflation to its 2% objective. In assessing the appropriate stance of monetary policy, the committee will continue to monitor the implications of incoming information for the economic outlook. The committee would be prepared to adjust the stance of monetary policy as appropriate if risks emerge that could impede the attainment of the committee's goals. The committee's assessments will take into account a wide range of information, including readings on labor market conditions, inflation pressures, and inflation expectations, and financial and international developments. There you go. That is the official statement. So notably, they mention the 2% inflation goal multiple times throughout this document. Let's take a peek at what's going on with inflation. So this is the September 2023 CPI. We said that over the last 12 months, all items in the index increased 3.7% before seasonal adjustment. If we go down to our chart here, we have all items in the blue trend line and all items less food and energy in the purple trend line. What this shows is that all items, including food and energy, we had a small bump after our low of 3.0% in June of 2023, and we are back up to about 3.7% in September of 2023. If you look at the core CPI number, which they try to reference as much as possible, all items excluding food and energy has dropped to about 4.1%, excuse me. So what this shows is that everything is continuing to trend down. However, if you include food and energy, we did have a little bit of a spike, including food and energy, between June, July, August, and September. This could be because of seasonal stuff, which is people are staying inside more, running more heat, or in certain areas AC, but typically you'd see that in the summertime. But what this is showing is that inflation still remains elevated. We are basically on either number, according to what you want to go off of. We're sitting at about double of the goal. So that brings us back to the last FOMC meeting. They gave us their actual predictions and economic forecasting. So if we look at this, we can go to median, central tendency, and the range. So this is basically the average where they think it's going to be. This is where they think the central is going to be. Kind of like you can think of it as one standard deviation about, and then you can kind of think of this as like 2 or 3 standard deviations away from their predictions. So we are going to be looking at PCE inflation and core PCE inflation. So we're looking for 2%. When do we see true 2.0%? That would be 2026 for the median. Core inflation, same thing as well. That would be 2026. You will note that we are at the end of 2023, which means that according to their current projections, we are still 2 full years away from that 2% figure. Now, if you want to try to give them the benefit of the doubt and say that they're calling a 2.99, technically 2% inflation, if you do some serious rounding, then that still means we're looking at 2024 for either of these figures. The potential range for what's going to be going on, if we again look at the ranges over here, we see 2.1% at the absolute earliest in 2024 and 2.0% in 2025. Again, if we look at core inflation, which is the number that we're probably going off of, we have 2.3 in 2024 and 2.0 in 2025. So what this is showing is that They say that they're committed to the 2% goal. However, they think that they're going to be holding it at this rate, if not slightly higher, for an extended period of time. Because if we go down and we actually look at, here we are, the predictions for where they're going to be holding rates in the future. 2024, one member of the committee actually thinks we're going to be at about 6%. Everyone else has an average about 5 or 5.25, maybe slightly lower. And then after that, through 2025, we're going to keep dropping until the goal is to effectively get around 3% federal funds rate here in longer run, like past 2026. So with that said, a lot of the rumblings have been talking about there will be one more interest rate raise this year. We didn't get it this time, and there's only one more FOMC meeting, and that's going to be on December 12th and 13th. So that is basically 42 days away. This is the CME FedWatch tool. This shows the predictions for what we think is going to be going on. So looking at the next meeting on December 13th, we have a 77.5% estimation that we will remain at 5.25 to 5.5, and a 22% for an increase. Previously, for the last one, we had about a 10% increase earlier on before all the Hamas and Israel stuff happened in Gaza, and then we basically went to a 97.5% chance of no raise and even like a 2% chance of a drop. So with that said, let's talk about what this news has done to the market. Looking at the S&P 500, we've been on a bit of a slump ever since July 27th. Since that time, over the course of about 92 days to our recent swing low, we've dropped about 11%. Notably, we have had a bit of a rebound over the last 4 days of the market being open with about 3.5% recovery. But one of the trends that we're noticing is it appears that we're in a bit of a downward channel when it comes to the S&P 500. Other notable figures have talked about how the market might be in a cooling off period for now. That is entirely possible. And should that be the case, we do have a bit of a resistance here at about 410 where we had our last reversal. So that might be an area to watch as we start heading towards the latter half of the year. In Bitcoin news, the news did have a positive effect on Bitcoin here in the last 4 hours. You'll see that we did go from about 34,500 to about 35,300 where we're sitting at now. We had a wick high at about just over 35.5. And notably, we are coming towards the end of our 60-day cycle. We are about... oh, geez, we're running the chart. So 10, we are about 9 days away from 60 days. We do have a new swing high in this cycle, which means that we could have a right translated cycle, which means longer than 60 days. If we go out to 75 days, that would be the 25th of November. Keep in mind for the average cycle length, that's almost 2 standard deviations away. So that would be about a 95% chance that the cycle will end sometime between now and the 25th. So there's about a 5% chance, if you want to go off normal distributions, that we will be seeing a cycle extend past 75 days. With such a dramatic high here on, what is this, day 51, it's entirely possible we might be seeing that 5%, just because this in and of itself is a very, very large change in what predictably was not going to be this large of a market. So we'll see. Going over to the other blue chip coin, we got Ethereum. Ethereum got a bit of a bump here as well, sitting from about 1,800 to about 1,850 right now. Ethereum has not had nearly as much price action as Bitcoin, and Bitcoin dominance remains a little over 50%. I want to say 51, 52%, but it still remains pretty strong there. Going over to our favorite coins, we are Hexicans after all. We got PHEX sitting at about 1.5 cents. Pulse made about 60... to 10,000ths of a cent, and then PulseX had a little bit of a gain as well. Notably, over the last 7 days, we were still a little bit down after our nice big pump that happened. Yep. So this is what our chart looks like for HEX currently. We had that high at about 0.0186, and we are sitting at about 0.0149 right now. It's possible that we might be on a bit of a 5-wave cycle, and this would be the end of wave 4, and we're going into our wave 5. Similar things are happening on both Pulse and PulseX. We do have a nice bit of a dip, but going back up, and PulseX as well. Very similar chart shapes, and if anything, PulseX is actually running more now comparatively to the other coins when we had on the 24th of October high. So with that said, one of the big news one of the big news theories is that Bitcoin is officially decoupled from the S&P 500. What that means is that this could be what Larry Fink was talking earlier when he says that there's a flight to quality, so to speak. Because if you look at the chart, Bitcoin has only been going up and up. In the meantime, we pittered out with the S&P 500, like we talked about on 27th of July. And then since then, we've basically had 3 full months of just downtrends. Meanwhile, 27th of July is right about there. Since then, we did have a bit of a dip, but we are massively up since then. So with that said, what does the future of the market hold? I think this is going to be one of the major events going on in the medium to longer, or the medium time horizon. So we have the Bitcoin halving in 2024, specifically around mid-April. Previously, through all of the previous halvings, there's been a pump before the halving, and I don't see why there wouldn't be one this time. I've seen articles in the past talking about, we know something's happening, so why would it not be factored into the market? Well, it wasn't factored in before, so why would it be factored in this time? Additionally, we are looking towards going into the second half of the 4-year cycle. So we've had a hell of a bear market. So our most recent high was back in November of 2021. It is now November of 2023. If you look at the 4-year cycle, we're basically halfway, which means the next 2 years could largely just be more slight positive accumulation and then finally going parabolic to reach a new high. Once we make it past $69,000, I do think we will see people declaring the bull market back in full swing of things. At that point, I do believe that we will likely be seeing the tops coming very soon after. My personal predictions is that 2025 is going to be the top of the year. November of 2025 would be great for a nice clean 4 years. However, there is talk of this cycle might be shorter, which means maybe, I don't know, half year, full year. Who knows? We'll have to wait and see. Till then, we're going to keep an eye on everything on the micro scale, specifically talking about inflation, looking at the next CPI report, looking towards December for possibly the final interest rate increase, and before we go into the halving in April. Well, with that said, I am Zenith with Hexago Space Force. Thank you for tuning in, and I will catch you guys next time.